Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So you're seeing mixed markets around the world, and our futures are pointing to a narrowly higher open this morning ahead of day one of the Fed's two-day meeting. So, Scott, do you think that the Fed meeting could have any effect on the short-term composure of the market?
Well, at this point, I think most consider that tapering is not going to happen anytime soon. Some think March, some think even after that, because the data that we've seen has been a little mixed to the downside. Plus the data is just all weird because of the government shutdown, so nobody knows what to trust. But bottom line is, one thing you can trust is the actual market action, which has been strong, which has been grinding to the upside. And if you look here at the chart of the SPX, you will see that since the November red dog reversal bottom, you've had lots of different trends. But the smooth trend, the intermediate trend that we've been following, besides right here coming below it for only a session or so, has been very strong. And if you look recently at the last 3 times you could have really navigated this market, okay, there were some clues which we will look for tomorrow with the Fed. This was one Fed meeting, I think, where we broke out and failed. That led to a small correction. Here, you had this head and shoulders top, false little breakout, led to about a 4% correction. Then remember here, we broke out above, that was the no taper, broke out above the 1708, quickly within 2 days retraced, back down to the trend line before, that whole debt debacle or whatever went on here with the government shutdown. So PS, this was your last most recent move. This was your last prior high, broke above it. And at this particular point, we're still just hanging above. So the question is, on Fed Day, what type of candle do we get? Do we get, a push through a prior high, squeeze everyone one more time and then close below it, or a strong, which is continuation? This time we broke above the highs here, and we didn't fail. So we're grinding higher. We're a little extended from the 8-day. So right now you have 1764 as your pivot. Then you have micro support, which is around 1757, and then 1746, which is the 8-day. And you cannot be bearish or short on the brain until we get a break and close below this, which we haven't even thought about doing for multiple weeks.
Well, on Fed Day, we can also see gold get more attention, and gold has been starting to act a little bit better, but had trouble finding some momentum yesterday. It seems like it's been hard for it to find that upside momentum.
Yes, it's like every time you look for upside follow through, it just fails. So traders are trying to trust gold and silver again, but there hasn't been that much, compelling action. I know I tried to be long yesterday, and it broke above the prior day high, which is usually a good thing, and then it came back below it after a few day run, so I got out of it. You look at the GLD, you will see, this was, the blood on the street lows, which led to a decent trade that got contained by this downtrend. Then I guess you could say we put in a higher low right here, and then you actually had a gap that stuck. So that was a step in the right direction. So all in all, I still think there is a little hope for some of the gold guys, but overall for me, it traded through this prior high, couldn't hold it, so I just got out of the way. Now it's opening, down a little bit. I would say, it really should hold this 129.20 area, the 8-day, in order to keep traders' attention. If it were to get below and close below 128.22, I think those gold bugs will be just as frustrated as they've been during this entire year, because during the entire 2013, you've had really a pretty massive downtrend that was accelerated once it broke below 150. So the question is, kind of retrace higher, and that's what we're looking for. But I think stay patient, stay for, wait for a true signal, which we really haven't seen.
Right, for that new bull market in gold that we keep hearing about.
You can't even get a trade, let alone a new bull market in gold. So, everyone should just, keep things in perspective.
Right. Well, yesterday we also saw the consumer staples group lead the market, which was interesting to see. Colgate was the best performing one of the group, made a new all-time high, so a 2% gain. Were you surprised to see that group leading?
I just wish I had a little bit more attention on it. At times during this year, the group has led and then rested. And if you look at actually first the ETF for the consumer staples, look at this. I wish someone would have pointed it out to me sooner. Look at the size of this channel for May. You have May, June, July, like 6-7 months of a sideways horizontal channel. And then once the market broke back up, it had some power here, and then it actually was able to get some follow through. So at this point, as long as it stays above 42, this group can continue higher. And like you mentioned, once you see a strong group, you go for some individual names. And, look at Colgate. A lot of people brushing the teeth. Good for them. White smile. But anyway, with that being said, this was one level of broke above, and then here's another one. And if you were in this, you could have taken out CL and given it 4 letters for a tech stock and it moved just the same.
And Procter & Gamble had a good day yesterday as well. Just going through some of these names in the group, had a decent gain of 1.6%.
Yes, and this one, when you see some names start to go, everyone looks for other ones, and this one has a nice base. There's still a trade here, I think. There's still that breakout trade that could happen. Yes, it's just had a big move from 76 to 81, but look at the size of this resistance going sideways, okay? And this has been in this channel since almost April. So 1, 2, 3, 4, 5, 6, almost 7, 8 months above the moving averages. I'd like to see an inside day maybe, hold above 80, go sideways a little bit, and then perhaps we get one of those cash flow trades above 81, 86 for a breakout move like you saw with Colgate and you saw with the actual ETF.
Right. And a lot of people drinking soda and eating snacks too, because Coke had a good day. CocaCola saw gains of about 1.5% there. What are the levels you're watching there?
Coke is it, right? Well, this one is not it yet, so a lot of, but it broke a downtrend. So this is a different type of trade. You look at Coke, it put its, peak in May, and it's been in a downtrend ever since. And finally, broke this downtrend, held sideways and broke above it, so that could trigger a new move here. So with that being said, perhaps stick with it. So now it's got to stay above this 39 and change. It gets above yesterday's high coming up. I don't see why, if you're in Coke, maybe you have a move to at least 41, especially if they're looking at some of these consumer staples that make a little bit of sense. I actually like Diet Pepsi.
Me too. How about Kraft? 1% gain there. Kraft mac and cheese. What do you think? What's your what's your poison there?
What's my poison with this one? Well, Chase likes his Kraft macaroni and cheese. Let's see. It shows
Clearly, a lot of people do.
Shows you how much I look at this. I don't even know the symbols. Well, anyway,
KRFT.
There you go. Makes sense, right? Well, anyway, here you go. Big move. Little bull flag. Traded above it. This is above the moving averages, also in the game if you're long this. Has a really nice long-term channel also. Just coming up, not a 52-week highs yet, poking its head above. So if it stays above 55, I don't see why it can't trade through yesterday's high and continue up towards this 58 area. I might have to go get them some more to help out the stock.
All right, well, we're going to turn the focus to earnings coming up right after this quick commercial break.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
We're back and going in the trenches with stocks reporting earnings this week. Let's start with Apple, which had a pretty solid report out yesterday and is up this morning. With the levels you're watching with Apple.
Well, Apple is going to be interesting because after the report, it sold off pretty quickly because it just had such a big move. I think people wanted to sell it off, and they focused on the margins. But the margins, to me, were a little soft but fine. This company's making a heck of a lot of money. The iPhone sales were strong. iPads were in line, but people kind of knew that the iPhone is cannibalizing that a little bit. Macs were okay. And it's probably going to be the place to be for the holiday season. So I'm glad the earnings risk is behind us. But in perspective, you have 2 things. One, last quarter, it came from 420. Okay, and I know obviously last year it came from 705. So if you take a quick look at the chart, to see where it is, this was the top in Apple. That was 700. That was, actually right around my 40th birthday, believe it or not. Anyway, with that being said, here's your small head and shoulders top, a way to get out of that stock. Here's when it broke the 50-day. Here's when it broke a longer-term trend. And then here's where we are now. If you remember last quarter, we talked about Apple saying, what could we see different here? Because people were losing a lot of faith in Apple. And what you saw there was this gap up, held, and then that created a nice tradable move to resistance and then consolidated again. And this was your last viable breakout. So with that being said, you look just across, okay, because a lot of different price targets on Apple now. Some 560, some 600, blah, blah, blah. This is 555, and here is about 580. I do think at some point into the end of the year, we could see this, 555 to 580, which is a decent amount from here. You want to go short term because there's a lot of options surrounding this earnings. I have a call spread, so I'm wondering whether or not I can get out and then get into the stock because of the premiums will be sucked out. Here's your short-term pivot, 533. 533, if you can get and stay above 533, perhaps short-term momentum stays here on its way to that 540, 550 area. If it breaks above here and can't stay above here, it probably needs a little bit more time to absorb this last move. So I'd keep it light with Apple, but I think ultimately dips are buyable, and we do see this area come the end of the year. And I'm sorry, I could always do a long segment on Apple because it's part of my job.
Well, yeah, people want to know about Apple. But, you know, they also want to know about some other big names that we have coming up today and tomorrow. LinkedIn reports after the close today, and expectations are pretty high. Analysts are looking for earnings that will grow 43% from a year ago, and revenue is projected to grow 53% from a year ago. So what are you doing with LinkedIn? Are you taking options into it?
I've taken the last 2 quarters, I believe, and this quarter I'm probably not. Because if you look at the chart of LinkedIn, you know, I put this on the radar, you know, over a year ago when it was one of my 3 amigos, which what at that time was 3 different IPOs and 3 different groups I could be for the drawer more than a trade. And here was that cup and handle pattern. I had earnings here. That made sense. That was a nice tight pattern. And then, you know, you had another nice base on base above that, and now here we are, which if you look at it, still just another base on base. So with that being said, you know, as you move higher, it gets a little bit more vulnerable that it won't increase or stay that course. So anyway, with that being said, you know, if you're in it or you're looking for a trade, here's the pivot. Okay, it really hasn't done much in about 2 months, so that, you know, it's not priced for perfection, but it's going to need a heck of a report to trade above 253 to 255. So if they beat on everything and guide up and it gets above 253 real fast, you know, maybe I'll try and get a trade for a measured move of this channel, which is 220 to 250. That can get you to 275. You know, if, you know, they're just in line, chances are it's not enough to sustain the move we've had, so you could see maybe a move back down to test a lower end. So for me, just not that compelling. But overall, I think the story for LinkedIn is strong. If you've been holding on to it, you know, ever since it did break out way back when, you know, and you're a little worried, you could always trim and trail a little bit, or maybe, you know, put a collar around it where you sell some calls while the premiums are inflated, buy some puts. So this way, if it does get hit, you know, you're not too worried about it, and you're protecting some of the move that you've enjoyed since it became, you know, public.
What about Baidu? Baidu also reports after the close today. The company is expected to report earnings of $1.43 per share, and this one's had a nice run into earnings as well.
Again, like when these stocks have such a big run into earnings, and then on earnings day the premiums are so high, I feel like it's difficult to play an option play, because you could be right, it could be up, but they could suck the premium out and you're wrong. So sometimes it's better either to trade after or just avoid and wait for a new setup. If you want to see the levels in Baidu, you know, you look here. I remember when it first woke up, we talked about it below 100, and then here it is up here near 150. So with that being said, it was sold off a little bit because of the Chinese speculation. Remember the NQ, the false allegations. You know, you look at Sohu got crushed after earnings. Look at the size of that move lower. So for this, you know, I think it's an avoid. If you're an investor in it and you've been holding it for multiple years, maybe stay the course. Again, just like LinkedIn with a collar. If you just think it's going to go higher, be careful. But, you know, here it is. 167.55 is a pivot where it has to stay above for momentum after hours. And if it's not enough, you know, you could see a move down to 140 or even 129.63. So, you know, I think it's going to be, you know, after hours trading has been tough lately. So just, you know, don't only when this compelling. Both this and LinkedIn just don't look compelling.
What about Facebook? We have Facebook reporting after the close tomorrow, and this one's actually been showing a little relative weakness over the last 5 or 6 sessions.
Yeah, and if you didn't get caught, I think there's an opportunity here. You know, I don't think Facebook is over. I know it's doubled since last quarter. So again, hard to get involved with any teeth because of the size of the last move. So you look here, you know, this was the really nice setup, the cup and handle pattern going into the last earnings. Remember that? Just like I just showed you with LinkedIn. And then you had another trade. Look at this. You could symmetrically draw a line across, and then this is where it opened after earnings. Oh, look at that right there. And then from there, you know, so you had a good option move, and you plus had a tradable move thereafter. And if you look at the tradable move thereafter, it's been, you know, it's been very strong, starting from what buy area here, blah, blah, blah. And then on this last gap, it was an exhaustion gap. I actually got short there. You know, I covered into this move, and now yesterday I nibbled a little bit on options. Okay, and if over the next session or so we come in a little bit more, I'll get a little bit more calls just in case, you know, the number is really that good and it could take out the prior high here of 54.81. So, you know, I think down here, right around the 47 to 50 area, it's worth a try, but I would use it small, just a tier 1.
All right, time for some quick hits. Let's talk Mosaic, which triggered the list buy price of $47.10 from off the charts yesterday. Now what with Mosaic?
It's got to get above 47.40 with some intensity and volume in order to fill this gap. Just keep it light, but look at the chart real quickly here. Above 47, what is that? 47.40. It could see more of a gap fill.
All right, and Wells Fargo has been holding above the 8-day. What do you do with this one?
This, the banks have been lethargic, but this is a nice tight setup, kind of like the one that Goldman Sachs has. You look here at Wells Fargo. If it does trade above 43.05 and some money comes back to the banks, I think this is a cash flow trade here. That's 43.05, and if it does get above and stay above there, next spot is 44.
And Tesla, Elon Musk, Tesla has a head and shoulder pattern that I know you've been watching. What are the levels you're watching here?
Well, this one, we talk about momentum names and when they change a little bit. And we've been riding this trend as it rode the 21-day, and as soon as it broke below that and got a little heavy, we tried to switch gears. So if you look here at the chart, ever since 2 quarters ago, it's been a really nice move all the way to the upside. So that being said, it broke and closed below the 21-day here, tried to bounce back, was lethargic. Market made new highs, and for the first time, Tesla didn't, so not leading the market. There are people pointing out this head and shoulders pattern, which is somewhat valid, but it takes a lot of volume to break a neckline. So I'm a little short here. I know that Seeking Alpha had a positive article, so it's up a little bit. So I would wait. My stop's going to be probably right here, if not a little bit sooner. But if it can go negative and start trading below 162.20 or 160, I do think at some point it does hit this 100-day. And still, in perspective, look at the size of the move. So coming back to here is not the end of the world. It's just a matter of what happens today.
And Google's holding above 1,010 feels crazy to say that. What are still higher prices in store?
It needs time. What was good is you had a good earnings play. You had a nice gap and go, and I had a call, so that was a nice surprise. And then they gave you another trade above 1,019. And now if you look at the stock, it's getting a little wishy-washy. Okay, here's when it broke above that 1,019, which had a nice bull flag, and there was a tiny little red dog reversal, and it's come down since. So with that being said, 1,010 is micro support, but overall the 8 days catching up and it still looks fine. I'm still in a call spread trying to give it some time. It's just a little noisy right now. If it were to get below 110 and come back above, maybe you get involved with some of the equity versus just options, and then if it starts to get above 1,023 to 1,028, maybe you do get some momentum. But for right now, it's trying to absorb a massive move in earnings. So just be selective with this trade because it's usually $1 wide, and if you're wrong for that second, you could lose a few points pretty quickly.
All right. Well, there will certainly be a lot of headlines today, what with the Fed meeting and earnings. What will you be focusing on as you begin the trading session?
Well, I forgot to put this on. I wanted to talk about one more thing. JCPenney's. Okay, stock's been crushed, annihilated. Finally, yesterday had some news on better than quarter-on-quarter sales, whatever it was, and it actually had an up day. This stock has been left for dead, trading as if it's going to go bankrupt. So if it doesn't go bankrupt, which it it seems like it might not, you have a downtrend here that it broke above, okay, on some decent volume. So this is what I call a day one. If it were to trade above 749, I think that there's a trade there back to close to $8. If you remember, what really screwed this stock, so to speak, was that they gave all this positive metrics and whatnot when the stock was around 1050, and lo and behold, they did a cash offering at 9.5, and that kind of messed everybody up, and the stock became loose and just for sale. So now maybe this is the first sign that it could repair and retrace a little bit, and who knows, ultimately maybe it even gets back up to this area over some time. It's heavily shorted, it's gotten crushed, they have a lot of real estate, this and that, and right here, I'm long it from about, I think, like 710 yesterday, and I'll try and stay the course. All
right, so that'll certainly be on your radar today.
Yes, and just as far as earnings, let's see what happens with Apple. If it could break above 534. Let's see if the rotation continues, and then tomorrow really it'll be what type of move do we get after the Fed? Do they accentuate this move and then do we get a rest, or do we just continue grinding higher, and that pain trade with underperformance by a lot of managers out there probably continues?
All right. Well, with that said, that's your morning call for this Tuesday. Happy trading, everybody. Have a great day.